Understanding the difference between 501c and 501c3 is crucial if you're running or planning to start a charitable organization. While many people use these terms interchangeably, they represent distinct tax categories with important differences. The primary distinction is simple. Both 501c and 501c3 organizations are tax-exempt, but only donations to 501c3 organizations are tax-deductible for donors. This key difference affects fundraising potential and donor relationships significantly. Let's start with an overview of tax exemption. A nonprofit with tax-exempt status doesn't pay corporate tax on income related to its organizational purposes. However, nonprofit status isn't automatic. Organizations must apply for tax exemption with the IRS and meet specific requirements. The Internal Revenue Code contains 28 different categories of nonprofit organizations. The term 501c actually refers to a section of this code that includes multiple subsections, with 501c3 being just one of them. Other common 501c classifications include 501c4 organizations focused on social welfare, 501c5 for labor and agricultural groups, 501c6 for business leagues and chambers of commerce, and 501c7 for social and recreational clubs. Each classification serves different organizational needs and comes with specific benefits and limitations. What exactly is a 501c3 organization? It's a nonprofit corporation that qualifies as a charity exempt from federal taxes. These organizations must fit into specific tax-exempt purposes defined by the IRS, such as charitable, educational, religious, scientific, or literary activities. They can also focus on public safety testing, fostering amateur sports competition, or preventing cruelty to children and animals. To qualify for 501c3 status, organizations must meet several requirements. First, they must serve a charitable purpose as defined by the IRS. Second, no earnings may benefit private individuals or shareholders. While directors and officers can receive reasonable compensation for their work, the organization cannot issue dividends like a regular corporation. 501c3 organizations face important restrictions. They must keep lobbying and legislative activities to an insubstantial level, generally 10 to 20% of their activities. Direct political campaign involvement is prohibited entirely. Additionally, if the organization dissolves, its assets must be distributed to another 501c3 organization rather than to individuals. While all 501c organizations receive tax-exempt status, some income may still be taxable. If an organization engages in unrelated business activities, that income is subject to unrelated business income tax, requiring filing Form 990-T. The choice between different 501c classifications depends on your organization's primary purpose and activities. If collecting tax-deductible donations is important, 501c3 status is essential. However, if political advocacy is central to your mission, another classification like 501c4 might be more appropriate, even though donations won't be tax-deductible. Understanding these distinctions helps nonprofit leaders make informed decisions about their organizational structure, ensuring compliance with IRS regulations while effectively pursuing their mission.